What you are about to see is based on information obtained from a little-known government document called FT900. It's published by a nondescript federal office located at 1401 Constitution Avenue in Washington, D.C., less than 1 mile from the White House. The following presentation reveals exactly when the next 9/11 will occur, why it will change America forever, and 4 easy steps you can take to protect yourself and your family.
8:46 a.m. on Tuesday, September 11, 2001. That was the exact moment America changed forever. I'm sure you remember exactly where you were and what you were doing when Flight 11 crashed into the North Tower of the World Trade Center. The terrorist attacks of that day helped set in motion events that have influenced practically every aspect of our lives: our safety, personal freedom, security, economic well-being, and hopes for the future. And now, 12 years later, we're about to face a similar event. A dramatic moment that will change everything you believe to be true and normal, and do so almost overnight. Although it won't cost American lives, it will trigger a virtually unstoppable chain reaction that will destroy the way of life of millions of unprepared Americans. Historians will recognize this as the biggest political and financial event of our century. Ironically, details of this event are buried inside a little-known government document called FT900. In short, this document reveals a major cover-up for the most powerful financial institution in the world. While this is a public document, only a handful of people have figured out its implications. 99.9% of Americans have yet to connect the dots. The truth is the details of this event are not obvious. Only those who know where to look and are willing to investigate decades of data have been able to piece together this major cover-up. And that's exactly what I've done. I've spent the last 9 months researching this topic, collecting evidence, and contacting experts. I'm confident that after you see what I'm about to show you, you'll agree that a major crisis is not only inevitable, but imminent, and that your wealth and your way of life are at risk. The good news is that this event will also result in the biggest wealth transfer in the history of our nation. For those of us who start preparing now, this will be the opportunity of a lifetime. In a minute, I'll reveal the contents of this document and walk you through the timeline of this event. I'll also show you all the steps you need to take to protect your family. But first, let me introduce myself. My name is Jeff Opdyke. Back in 2001, I was a financial reporter for the Wall Street Journal in New York. When the World Trade Center towers crumbled, I was standing on West Side Highway surrounded by thousands of New Yorkers who stood in silence and tears. I saw the whole thing from about 6 blocks away. I knew at that moment our lives had changed forever. Since then, America has changed a lot. In response to the attacks, we launched a war on terror that so far has cost us $4.5 trillion. With the creation of more than 200 new agencies, our government has been spending wildly on security and wars, helping push the nation towards bankruptcy. Our government is also growing increasingly paranoid, even going so far as to illegally spy on its own citizens and allies. With Big Brother watching, we're no longer as free as we used to be. In short, the war on terror continues to cost us lives, money, and freedom. And just like 9/11 had a lasting impact on our society, the event I will describe today will also reshape America in a different but equally dramatic way. 401ks and IRAs will shrink by 40% or more. Millions of Americans will fall into poverty overnight. Unemployment will skyrocket. Markets around the globe will drop at least 50%. I expect we'll see some politicians indicted. People will riot in the streets. Some of our closest allies will break agreements with us. The government will have no choice but to suspend Social Security checks and all forms of welfare payments, including food stamps and unemployment insurance. And when all is said and done, the U.S. may even look like a third world country. You will need to reevaluate who you do business with, where you bank, and how you invest for retirement. This event will even have a huge impact on the lifestyle of your children and grandchildren. I know all of this sounds pretty daunting, but believe me, I have no interest in trying to scare you. As the executive editor of The Sovereign Investor, it's my duty to sound the alarm bell loud and clear. The independent financial research team I head has been doing just that for years now. We were one of the first financial research groups to warn investors about the dangers in the derivatives markets and the threat they pose to the global financial system. Many experts claimed the 2008 financial crisis was unpredictable, that it was a black swan event no one could expect. Yet in 2005, we mailed a report to our subscribers and to influential decision-makers in the U.S. on this very crisis. We published this report long before the word derivatives ever hit the front pages, and it predicted with uncanny accuracy the global financial meltdown. We also warned our readers of the dollar crisis in 2004 and 2005, the meltdown in the private equity markets in 2007, the collapse of Lehman Brothers in 2008, and the European debt crisis. And now I'm here to warn you of another looming crisis, one that could soon trump them all. I've already taken some drastic steps to prepare for this event, because I know once the mainstream media starts reporting on this, it will be far too late for anyone to act, and I hope you will do the same. I hope you will act to protect your family and your wealth from the coming upheaval. That's why I've created this presentation, to show you exactly what steps you can take today to protect your family and which investments will be on the winning side of this great wealth transfer. But before I do that, let me first tell you why I believe this event will topple one of the greatest pillars upon which our American empire was built. I'm talking about trust. Trust in the U.S. government and its institutions. In recent years, many analysts predicted America's out-of-control debt would destroy our country. And yet, our economy seems to be doing okay. Why? Why hasn't this ticking time bomb exploded? It comes down to one seemingly simple but very important concept: trust. We all know that trust is the most important glue in any relationship, either in business or in our personal lives. This is also true in our global financial system. Most of us take this for granted, but trust in the U.S. government is a big reason why America has become such a dominant force over the past century. It's because of trust in our government that the U.S. has been able to borrow at the lowest interest rates available in the world for years. Even in 2008, in the midst of the worst financial crisis in 80 years, our federal government was able to borrow vast sums of money at an interest rate close to 1%. It was trust that allowed our government to bail out major banks and prevent the collapse of our financial system. And it's that trust that has allowed our government to get away with a spending spree of historic proportions for far longer than anyone might reasonably expect. But the government isn't the only one that benefits from this trust. We all do. Because of widespread trust in our currency across the globe, we pay a relatively low price for food, energy, clothing, electronics, and other products. Since our currency is accepted everywhere around the world, we can pay for all of our imports in dollars. We've been able to buy everything we need with paper money that we can print willy-nilly. In other words, America has been able to exchange paper dollars that are produced at almost no cost for valuable goods. So, trust in America has made it easier for us to import more than we export, to consume more than we produce, and to spend more than we earn. It's a huge benefit that has allowed us to live in McMansions, drive luxury cars, pay for cheaper gasoline, buy 3D HD TVs, load our pantries with cheap food, and so much more. Trust in the U.S. government and its institutions, it turns out, has given us the greatest standard of living the world has ever seen. It's what has made the American dream possible. If this trust is shattered, however, well, our way of life is over. I recently talked about this with my friend and legendary investor Jim Rogers. His take is that once trust in America is broken, it will lead to a huge decline in the standard of living of U.S. citizens like nothing we've seen in nearly a century. Unfortunately, that's exactly what will happen once the public finds out the details inside this little-known government document. Details that reveal the biggest cover-up in U.S. financial history. Most Americans have never heard about this document, but it hides undeniable evidence of a major cover-up. Every month, the U.S. Commerce Department's Bureau of Economic Analysis publishes this document called FT 900. It shows official U.S. international trade data, everything from how much barley we exported to how much glassware we imported. But it's the section labeled Miscellaneous Commodities that holds my interest. It's there that you find a category called Gold. This line basically reveals how much gold the U.S. has been exporting and importing. For example, in 2012, the U.S. exported about $24 billion worth of gold and imported $11.2 billion. On a net basis, that means we exported $12.8 billion worth of gold in 2012. Based on the average price of gold during 2012, our country exported about 217 tons of gold on a net basis. And how about last year? Well, in 2013, America exported a bit more than $26 billion worth of gold and imported almost $11 billion. This means that on a net basis, we exported $15.4 billion worth of gold. Based on last year's average price of gold, we exported just over 300 tons of gold. It was surprising to see that America was exporting so much gold, so I decided to investigate how far back in time this gold export trend extended. The results were so shocking that it took me a moment to wrap my head around it. I knew I had uncovered something big. Here's what I found. Since 1991, the U.S. has been consistently exporting large quantities of gold on a net basis. And the amount of gold the U.S. has exported is well above and beyond what the U.S. should be capable of exporting. Let me show you what I mean. Using data from Gold Fields Mineral Services, the U.S. Census Bureau, the U.S. Mint, and Bloomberg, I was able to determine the U.S. total demand and supply of gold during those 20 years. During that time, the U.S. had a total amount of 7,532 tons of gold available for consumption. But the U.S. consumed 7,605 tons. So we consumed more than we had available to us. That implies we should have been a net importer of gold. But oddly enough, we were not. In fact, we exported a massive 5,504 tons. How could we have possibly exported more than 5,500 tons of gold after we had already consumed all the gold we had available, plus a little more? The math makes no sense. Where's all that gold we exported coming from? It had to come from somewhere. That's how I reached this shocking conclusion. There's an unexplained supply gap of 5,577 tons of gold, and there's only one institution in the U.S. capable of secretly supplying such large amounts of gold, the Federal Reserve. And I'm not the only one who has figured this out. Canadian billionaire Eric Sprott, founder of Sprott Asset Management, says the only U.S. seller that would be capable of supplying such an astonishing amount is the U.S. government, with the reported gold holdings of 8,133 tons. Bill Gross, founder of PIMCO, the world's largest bond fund, calls this scandal the Fort Knox fairy tale, referring to the Army base where the gold is supposedly being held. Here's what he said recently. $54 trillion of credit in the U.S. financial system based upon trusting a central bank with nothing in the vault to back it up? Amazing. These are not some wackos who believe in crazy conspiracy theory. They're highly respected professionals who have made hundreds of millions in the financial markets. And like me, they know the jig is up. Still, I know some people will find it hard to believe our government would sell off our gold. But the truth is this has happened before. Take a look at this chart. It shows the official reserves reported by the U.S. government. Notice that America accumulated a massive amount of gold during World Wars I and II. At one point in the 1950s, the U.S. had 20,500 tons. At that time, this represented half of all the gold ever mined. It was the largest accumulation of wealth the world had ever seen. This shocking concentration of wealth was a hallmark of the all-powerful and wealthy America other nations envied. But in the last 4 decades, our government squandered all of that wealth. In the 1950s, the U.S. government started selling most of our gold to various European nations. From 1957 to 1972, our holdings went from 20,500 tons to just 8,500, a decline of almost 60%. Since the late 1970s, America's officially reported gold reserves have remained at a constant 8,133 tons. So, according to the Fed, the U.S. Treasury has not bought or sold a single ounce of gold for more than 3 decades. How is that possible? The government's own documents, the FT 900 reports, show the U.S. has been exporting massive amounts of gold for the last 20 years. Yet the Fed has been telling us for more than 30 years that America's gold reserves have never changed. Again, the math simply doesn't add up. Fort Knox is still viewed by many as a golden beacon of global finance, a symbol of the American empire's superpower status and strength. It's the world's most secure vault, made of 21-inch thick material that's resistant to drills, torches, and explosives. It's contained on a 109,000-acre U.S. Army post surrounded by video cameras, minefields, barbed wire, electric fences, and armed guards. But this is all a big smokescreen. This last remaining symbol of American financial might is about to be exposed as nothing more than a monetary mirage. The FT 900 document suggests the vaults are empty, but I understand why the Fed keeps reporting that it holds 8,133 tons. The Fed knows that if it disclosed most of our gold is gone, it would lead to a major crisis of confidence in the dollar and U.S. government bonds. Think about this for a minute. If America's gold reserves are a lie, then what else has been distorted, and where, if anywhere, is the truth? The full faith and credit of the U.S. government would become worthless overnight, and that would lead to a collapse of our economy and our way of life. We would reach a tipping point where faith in America's finances and confidence in its government are lost. Even the Treasury Department has just published a new report admitting that this kind of loss of confidence would have disastrous consequences for our nation. Here's what the report said. It has the potential to be catastrophic. Credit markets could freeze, the value of the dollar could plummet, U.S. interest rates could skyrocket, the negative spillovers could reverberate around the world, and there might be a financial crisis and a recession that could echo the events of 2008, or worse. That explains why the Fed doesn't want anyone to know the gold is gone. But they won't be able to hide this from the public much longer. Because the truth is, the FT 900 document isn't the only evidence I've uncovered that suggests the Fed has been lying about America's gold reserves. In fact, the more I investigated the story, the more convinced I became that something shady was afoot. So let me tell you about the 1992 closed-door Fed meeting. As the FT 900 document shows, the U.S. has been exporting massive amounts of gold for the past 2 decades. This is not a new phenomenon. In fact, the export numbers were already raising suspicions back in 1992. That's when former Fed Chairman Alan Greenspan raised the possibility that all the gold we're exporting was coming from the Fed itself. Members of the Federal Reserve meet 8 times per year to discuss and set interest rate policy. Those meetings are recorded, and the minutes detail everything Fed board members discuss behind closed doors. I managed to uncover the minutes of a Fed meeting from December 22, 1992. It notes a conversation between Mr. Greenspan and other members of the Fed. Chairman Greenspan says, "Did I hear you correctly when you said that the gold exports in October appear to have come from the coffers of the Federal Reserve Bank of New York? Has anyone looked lately?" Mr. Truman responds, "Well, I didn't want to tell too many secrets in this temple." Of course, the answer to Mr. Greenspan's question is no. Nobody has looked. We've not checked the Fed's coffers for the last 60 years. And that brings me to the Fed's constant refusal to audit the vaults. The only way to prove once and for all that the Fed isn't lying about America's gold reserves is through a full independent audit. Shockingly, the last audit of gold stored in Fort Knox took place in 1953, just after U.S. President Dwight Eisenhower took office. So there hasn't been a comprehensive audit of Fort Knox in more than 60 years. A number of congressmen have routinely requested a Fed audit to verify the vaults in Fort Knox aren't empty. But Fed officials have rebuffed every single request. Their response is effectively, "Trust us, the gold is all there." 3-time presidential candidate Ron Paul even introduced an Audit the Fed bill in 2011, but it never became law. His repeated calls for a full audit of the gold in Fort Knox have fallen on deaf ears. All these denials have raised quite a few eyebrows. Even a former insider at the World Bank, ex-senior counsel Karen Hudas, recently said, "I don't believe there's any gold being held in Fort Knox." In 2011, CNBC asked for a tour of Fort Knox to film the gold. An official at the U.S. Mint rejected their request, saying Fort Knox is a closed facility. Even the History Channel has weighed in. In its series, America's Book of Secrets, the cable network reported on the possibility that the U.S. government has been lying all these years. Here's a short clip with the introduction to their Fort Knox episode.
It is one of the most secure structures in the world. It safeguards the vast wealth of the United States. And its name is synonymous with one of the most precious commodities in the history of the world: gold. But behind this building's stone exterior are secrets. Secrets so outrageous.
Is there any gold in Fort Knox? We just don't know.
So controversial.
In my opinion, there's no such thing as an impregnable vault.
So potentially dangerous.
You cannot get answers because the secret history would explode the market.
That they must be kept hidden from the public.
If I tell you about Fort Knox, it's going to blow your socks off.
As you can see, all the Fed's secrecy has raised lots of suspicions. The United States could put these concerns to rest simply by auditing the gold and publicly reporting its findings. If the world's publicly traded companies must undergo annual audits, why should the federal government be immune? What are they hiding from us? It would be extremely easy for the government to audit the gold. According to a Treasury document, it would cost only about $15 million to conduct an audit. And yet the government has had the audacity to deny all requests for an audit because of the costs involved. That's just ridiculous. This lack of transparency is also raising concerns among major central banks. And that brings me to another piece of evidence I want to share with you. The Fed has been able to fool a lot of people so far, but some of our allies no longer trust the institution. Several foreign central banks store their gold in vaults controlled by the Fed. According to the New York Federal Reserve, much of the gold in the vault arrived during and after World War II as many countries wanted to store their gold reserves in a safe location. The German Central Bank, in fact, keeps 1,536 tons of its gold in storage at the Federal Reserve vaults in Manhattan, 80 feet below sea level. Earlier this year, German auditors demanded to inspect their country's gold just to make sure it was still there. But guess what? The Fed prohibited the Germans from inspecting their own gold. Of course, that raised a lot of eyebrows in Germany, with one leading member of the parliament, Heinz-Peter Hausstein, declaring all the gold has to be shipped back. Meanwhile, Karl Ludwig Thaler, a board member of the German Central Bank, demanded more transparency on the issue. He never got that transparency. And the result was what you would expect. the trust the German authorities had with the Fed has quickly evaporated. Germany's central bank, the Bundesbank, has announced it will start repatriating all of the country's gold from its vaults in Manhattan. Remember, that's 1,536 tons of gold. But after behind-the-scenes negotiations, the Fed agreed to ship only 300 tons, and the Germans grudgingly accepted it for reasons we might never know. The Fed never explained why Germany will get back just a portion of its gold. And get this, the Fed will ship those 300 tons over a period of 7 years. 7 years! As you will see in a minute, last year alone, China imported more than 1,000 tons of gold. If China can import 1,000 tons in 1 year, why does the Fed need 7 years to ship 300 tons? Those 300 tons represented just 5% of all the gold the Fed claims to hold in its New York vaults, a very small amount. So why is returning just 300 tons to Germany such a problem? The repatriation of a country's gold reserves is supposed to be a smooth and quick affair. It isn't supposed to take 7 years. When Venezuela demanded the return of its 200 tons held in London and Switzerland, it received all the gold within 4 months. And when Germany withdrew 940 tons of gold from London back in 2000, it was also a smooth and quick process. As always, there's simply zero transparency. The Fed still hasn't explained why it will take 7 years to ship the German gold back. But once you start putting all the pieces together, it's easy to understand why. The gold isn't there, it's gone. If America's gold isn't where it should be, inside the vaults controlled by the Federal Reserve, then where is it? There's not much transparency in the gold market, so most people find it hard to pinpoint the destination of all the gold we've been exporting. But there are clues. There's some data that shows a tremendous amount of gold has moved into other countries in the East, especially China. Take a look at this data released by the Hong Kong Census and Statistics Department. It shows that over the last couple of years alone, China has imported 2,232 tons of gold. That's why Bloomberg recently reported there are signs that gold is moving from west to east. And it's why precious metals expert John Embry says Western gold is headed east and the Western hoards are being hollowed out. Forbes also weighed in recently and concluded that the yellow metal may be in a transition stage from so-called weak hands in the West to strong hands in the East. That might very well explain why the Fed needs a ridiculously long 7 years to meet the German gold repatriation request. The gold is gone. Now the Fed needs time to try to buy back some of it. The problem is the Fed has run out of time, because China is about to make an announcement that will rock the world and help explain the Fed's lie. China tends to announce its official gold holdings every 5 years or so. The last time the Chinese officially announced the size of their country's gold reserves was April 24, 2009. The People's Bank of China, the Chinese version of our Federal Reserve, told the world that China's gold reserves had grown to 1,054 tons from just 600 tons 5 years earlier. And that's the last official word from the Chinese. So the market still operates under the assumption that the Chinese central bank controls 1,054 tons of gold. But it's about time for China to make a new announcement. I think that will happen by April. And that announcement will shock the world. According to my research, China has a gold hoard of at least 5,000 tons. Jim Rickards, hedge fund manager and author of the best-selling book Currency War, has come to the same conclusion. He recently said, "Come April 2014, China will announce that they own 5,000 tons of gold. That should be an earthquake. I have spoken to a number of sources in Asia. I've spoken to a number of people who are very close to the physical gold market. I've done my own investigations. Every time I have an estimate and try to verify it, what I get back is that I'm wrong on the low side." This pending Chinese announcement is the last missing piece of the big Fed puzzle. Once China makes the official announcement, our allies and lenders will all know the answer to the question, what's in Fort Knox? They will figure out most of the gold China is holding must have come from the Fed. After all, that's what document FT900 implies. It shows our government has been exporting massive amounts of gold. Think about this for a minute. The Fed claims to hold the largest gold reserves in the world, 8,133 tons. But my research shows that the Fed has supplied all the 5,557 tons the U.S. has exported in the last 20 years. This means the Fed now has less than 2,600 tons in reserve, not the 8,133 tons it claims to hold. With the Chinese announcement, the world will figure all this out. It will realize the Federal Reserve has been lying all these years, and everyone will know China's gold reserves is larger than the Fed's. In a moment, I'll tell you how this announcement will signal the closing bell for the American empire, and why it will trigger the biggest wealth transfer in history. I'll also show you the best ways to make sure you end up on the right side of this transfer. But first, it's vital you grasp this important concept. Gold is a big deal. You would think the Fed would be smart enough not to sell off America's gold reserves, but it's clear from recent commentary that the Fed has no interest in gold. On July 18, 2013, Fed Chairman Ben Bernanke testified to Congress that nobody really understands gold prices, and I don't pretend to understand them either. And when former Congressman Ron Paul asked Bernanke why then the Fed holds gold, he said he did so only because of tradition. For the Fed, giving away our gold is no big deal. But I think that's a mistake of historical proportions. Throughout history, gold has always flown to where wealth was being created. From Athens to Rome to the Byzantine Empire, our huge gold holdings after World War II were a clear reflection of our unique economic power. Just look at what happened to Britain when it started selling off its gold. The country was on the gold standard for nearly 200 years, from 1717 until 1914. That was a prosperous period for the British Empire. During that time, the country gave birth to the Industrial Revolution and ruled 1/4 of the earth and its people. The British pound was the reserve currency of the world, and this looked like it would last forever. But Britain abandoned the gold standard in 1914 to start printing money, and it sold 30% of its gold from 1928 to 1931. That was the beginning of the end for the British pound as the world's reserve currency. Pretty soon, the country was flat broke. At one point in 1967, the British currency lost 14% of its value overnight. Inflation got out of control, reaching 27% a few years later. There were endless strikes in nearly every sector, including grave diggers, trash collectors, and hospital workers. Things got so bad at one point mothers giving birth had to bring their own linens to the hospital. In short, Britain's whole economic system and society collapsed. And now we're on the cusp of reliving a very similar history. We're about to learn the hard way what the British discovered. Empires don't last forever. If the U.S. still was a manufacturing superpower, if we still had one of the fastest growing economies, if we still had a thriving middle class, we'd be fine. If our country was in great financial shape, having no gold reserves wouldn't be a problem. But we all know that's not the case today. Back in 1980, the U.S. national debt was less than $1 trillion. Today it's more than $17 trillion, which is the largest debt in the history of the world. And this doesn't even account for our unfunded liabilities, which our government keeps off the federal balance sheet. But Lawrence Kotlikoff, a well-known Boston University economist, has estimated our total debt. Here's what he told me recently. I estimate the U.S. fiscal gap at $200 trillion. The U.S. is arguably in worse financial shape than any other developed country. 6 decades of take-as-you-go has led us to a cliff. This is effectively a nuclear economic bomb. Our country is broke. It's not broke in 50 years or 30 years or 10 years. It's broke today. Even a report from a nonpartisan Congressional Budget Office has used such language as unsustainable and train wreck to describe the future of America's finances. So our country is not exactly a fortress of financial health. Far from it. For all practical purposes, our country's only true collateral is its gold reserves, but most of that is now gone. And once the world discovers the truth about the Fort Knox fairy tale, once it realizes our gold is gone and all we have left are trillions in debt that can never be repaid, trust in U.S. bonds and the dollar will be shattered in an instant, catching millions of Americans unprepared. After that, our American psyche will never be the same again. Our nation will no longer be the world's financial and economic powerhouse. Because whether you realize it or not, the full faith and credit of our government is really the only thing backing the dollars in your wallet. Without trust, the dollar is worthless. Most Americans don't know this, but our paper currency used to be freely convertible into gold coins. Take a look at this $20 bill from 1905. Its inscription reads, "This certifies that there have been deposited in the Treasury of the United States of America $20 in gold coin payable to the bearer on demand." In and of itself, the paper money had no more value than any other piece of paper. It was the fact that this piece of paper could be converted directly into gold coins that gave confidence in our paper currency. Of course, that's no longer the case. Pull any dollar bill from your wallet and take a closer look at it. Today's Federal Reserve notes are not backed by any real asset, and they omit any promise that they're redeemable for anything. Before 1971, at least the dollar was backed by gold, but since then, our entire monetary system has been based on nothing but trust. The bottom line is this. If the full faith and credit of the U.S. government isn't worth much, our money isn't worth much. Sadly, that's exactly what's about to happen. Once that trust is lost, we will have nothing to fall back on. Demand for the U.S. dollar will fall off a cliff, driving the value of our currency much lower. Remember, over the last 3 decades, we've printed and exported a lot of dollars. It's estimated that $3.7 trillion are held outside the U.S. As trust in the dollar disappears around the globe, all the currency we've exported will race back into the country. The increased supply of money will bid up prices seemingly overnight. Everything we consume will get much more expensive. All the gadgets, shoes, and shirts we import from China, all the beer, wine, and furniture we import from Europe, and all the coffee, fruits, and vegetables we buy from South America. We can say goodbye to everyday low prices. We will no longer be able to find cheap electronics, toys, and food in the shelves of Walmart or any other retailer. Oil will shoot towards $300 a barrel, pushing the price of gasoline towards $9.50 per gallon. Things like corn, wheat, and milk will skyrocket. The standard of living of millions of people will collapse almost overnight. Pension funds will be devalued, ruining the retirement plans for millions of Americans. Global markets will plunge and investors will bail out of stocks. Interest rates across the board will rise dramatically. Mortgage rates will climb up to 10%, killing the recovery in the housing market. Higher borrowing costs will also kill consumer demand, sending our economy into a deep recession, much worse than the Great Recession of 2008. With consumers spending less, businesses will be forced to initiate a cycle of massive layoffs. The unemployment rate will double, or worse. Because of higher borrowing costs, our government will have to print even more money just to meet its obligations. This will only accelerate the run on the dollar. And when all is said and done, when the shakeout finally settles, the global financial system will no longer be centered on the United States. Most of us have lived our entire lives under the dollar reserve monetary system that built and funded the American empire, so the majority believes that that's just the way the world works. But history shows that monetary systems change every 40 years or so. Before 1914, our global monetary system was based on the classical gold standard. The dollar was backed 100% by gold. But in 1914, the monetary system changed into a gold exchange standard, in which the dollar was only partially backed by gold. A $50 bill, for example, was backed by just $20 in gold. Then came 1945 and a new monetary system known as Bretton Woods. Under that system, world leaders established the dollar as the global reserve currency and linked it to gold at the rate of $35 per ounce. Finally, in 1971, President Nixon canceled the direct convertibility of the U.S. dollar to gold. For the first time in American history, the dollar was totally fiat, totally without backing in gold. Today, our fiat monetary system is 42 years old. But notice that all the monetary systems we've used in America since the late 1800s have each lasted about 30 to 40 years. Seems to me like it's about time for a new system, and it's closer than anyone thinks. Sadly, I know that less than 2% of the people who view this presentation will take action. Many viewers will choose to wait and see what happens. The problem is that this is not the kind of crisis that happens in slow motion. We're talking about a crisis of trust. Because of the fickle nature of confidence, this crisis will unfold very quickly once it begins. I'm talking a matter of weeks, not years, and that will catch most Americans by surprise. Economists Carmen Reinhart and Ken Rogoff explain this phenomenon in their best-selling book, This Time is Different, in which they examined hundreds of confidence crises. They call it the bang moment. Here's how they explain it. Perhaps more than anything else, failure to recognize the precariousness and fickleness of confidence is the key factor that gives rise to this time is different syndrome. Highly indebted governments can seem to be merrily rolling along for an extended period, when bang, confidence collapses, lenders disappear, and a crisis hits. Just look at what happened in Greece. For years, nations around the globe had no problem trusting the Greeks. Lenders were all too happy to lend money to Greece at interest rates of between 4% and 6%. Then, in 2010, the markets realized the Greeks had been lying. The country's deficit was 12% of GDP, not the 3% the Greeks had long claimed. Once the market discovered that Greeks had been using derivatives to hide the true amount of its debt, everything changed in an instant. Interest rates jumped from 4% to 16% in less than 6 months. Almost overnight, the government lost its ability to borrow. The country's unemployment rate tripled to nearly 30%. The economy fell into a depression, and the Greek society collapsed. This was Greece's bang moment. Scientists have explained why these crises of confidence happen so fast. They call it the critical state. As they define it, critical states occur when any momentary flicker of hope or doubt can be magnified beyond all proportion. Here's how American physicist Mark Buchanan explains the phenomenon. Financial markets share the tumultuous and ever-shifting character of the critical state. As a result, a change in the mood of a single investor may trigger a spreading wave of effects that leads to a fluctuation in the moods of all investors. That change is happening now. Trust in the U.S. is waning fast. Many nations have already started to abandon U.S. bonds. Take a look. This past June, our two biggest creditors, China and Japan, dumped nearly $41 billion of their Treasury holdings. This was the largest net foreign decline on record. They're losing trust in America's ability to manage its finances. For them, U.S. bonds are no longer risk-free assets. In recent years, even companies such as Berkshire Hathaway, Procter & Gamble, and Johnson & Johnson have been able to borrow money at a lower interest rate than the U.S. government. In other words, investors feel more confident lending money to certain companies than to our government. That has never happened before. Never. Lenders have also started demanding a higher interest rate on American debt. This is another indication that our creditors are losing faith in our government. Take a look at this chart. Our borrowing costs have skyrocketed in recent months. The yield on the U.S. Treasury benchmark bond, the 10-year note, went from 1.65% to almost 3%, one of the largest jumps in the history of our nation. A few months ago, investors were willing to lend money to our government for almost nothing. But today, nobody is willing to lend us money at such a low interest rate. Now our creditors are demanding a rate of almost 3%. The recent debt ceiling debate, meanwhile, has tarnished our credibility even more. Following that debacle, a leading Chinese rating agency downgraded our debt, saying, "The U.S. government maintains its solvency by repaying its old debts through raising new debts, which constantly aggravates the vulnerability of the federal government's solvency. Hence, the government is still approaching the verge of a default crisis." Besides dumping U.S. bonds, other nations are also actively reducing their exposure to the U.S. dollar in other ways. Many countries have made agreements that allow them to settle their trades in their own currencies, cutting the dollar out of the transaction completely. China, for example, has signed international currency agreements with 22 countries worldwide. Because of these agreements, 17% of the global trade in 2012 was completed using the Chinese currency instead of the dollar. Over the past couple of years, numerous global leaders have publicly criticized our currency. Chinese central bank governor Zhao Xiaoshuan, for example, said the world needs a sweeping overhaul of global finance to replace the dollar as the world standard. And during our recent debt ceiling debate, China's state-run news agency issued perhaps its most dire warning to date on the subject. As U.S. politicians of both political parties are still shuffling back and forth between the White House and Capitol Hill without striking a viable deal to bring normality to the body politic they brag about, it is perhaps a good time for the befuddled world to start considering building a de-Americanized world. Russian leader Putin, meanwhile, has said that the world has gotten itself into trouble with its heavy reliance on the dollar, while members of OPEC have repeatedly raised the idea that maybe we can price oil in euros. The UK's newspaper The Telegraph recently published the following article. "The sun is setting on dollar supremacy and with it American power." The article pointedly concludes that rarely before has international dissatisfaction with the dollar's role as reserve currency to the world been as great as it is now. A steady erosion of trust, which began with the financial crisis 5 years ago, has reached a apparent breaking point. The search for long-term alternatives to the dollar is on as never before. As you can see, confidence in America's fiscal state and the dollar is already eroding very quickly. It wouldn't take much to flush the full faith and credit of the U.S. down the toilet. And that's exactly what the Fed's big cover-up will do. A tipping point looms just over the horizon, and it's much closer than you think. I believe we will have our bang moment once China makes the announcement and the market realizes the Fed has been lying all these years. The biggest financial cover-up in the history of our nation will take an already declining trust in the U.S. dollar and destroy it completely. Don't wait any longer to take action. Take these 4 steps to protect your family and wealth now. For unprepared Americans, this will be a cataclysmic crisis that will make the 2008 collapse look like a little hiccup. It will be a messy transition to a new global monetary system. Historians will recognize this moment as the end of the American empire, but it doesn't mean you have to get crushed by it. In fact, for those who take the right steps today, this will be a once-in-a-generation opportunity to build wealth. And here's the best part. Even in the remote chance that other nations continue to trust us and we're able to somehow avoid this major crisis, you can still profit by taking the actions I'm recommending. You can even make 3 to 5 times your money over the next few years. So here's what I recommend. Step 1, buy 1-ounce gold bars and 10-ounce silver bars. In the 1970s, nobody made more money than Harry Browne and those who followed his prediction. You may be old enough to remember him. In 1970, Harry published his first book, How to Profit from the Coming Devaluation. In it, he predicted that the Bretton Woods monetary system would collapse. Our government had simply printed too much money. As a result, other central banks started to unload dollars in exchange for gold. But Harry knew the U.S. Treasury was running out of gold, which would force the government to cancel the Bretton Woods Agreement. In his book, he recommended people invest in physical gold and silver. His prediction became true a year later when Nixon closed the gold window. His book hit #1 on the New York Times bestseller list, and those who followed his recommendation made fortunes. 43 years later, here we are facing a similar situation. The last time we had a huge change in the monetary system was 1971. During that transition, the dollar lost 2/3 of its value. There was a huge transfer of wealth from those who held fiat paper to those who held real money, gold, and silver. I believe history will repeat itself. Once the monetary system based on a dollar reserve currency collapses, we'll see a great global gold rush, the likes of which we've never seen before. I believe when the dollar collapse hits the mainstream media, and when gold becomes as popular as internet stocks were in the 1990s, when everyone from your neighbors to cab drivers starts talking about buying gold, the price will explode in a parabolic move. That's exactly what happened in the 1970s, the last time we saw a crisis of confidence in the dollar. From 1978 to 1980, gold went up 400% in parabolic fashion. A similar move of 400% today would take gold towards $6,350 an ounce. That's why Citigroup strategist and technical expert Tom Fitzpatrick recently published a report saying, "We see no reason why this gold trend cannot perform as well as the last bull market in gold between 1970 and 1980. If you replicated the move exactly, it will take gold to $6,300. Michael Pinto, president and founder of Pinto Portfolio Strategies, thinks gold will go even higher. Here's what he said recently. When the U.S. dollar loses its world reserve currency status and the U.S. bond market collapses in full swing, a $10,000 gold price may prove to be very conservative. When I asked my friend Jim Rogers how high gold could go, he told me there is no fair price if the dollar becomes confetti. You can make up any price you wish at that point. In short, when trust in the dollar disappears, gold price projections of $3,000, $4,000, even $5,000 an ounce that some people laugh at today will look conservative by comparison. So what is the best gold investment you can make? Well, today many investors are shoveling their money into the wrong kind of gold investments. The gold ETF under the symbol GLD, for example, is very popular among retail investors, but that's the worst possible way to invest in gold. Investments like GLD are called paper gold because they don't really give you ownership of physical bars. During a monetary crisis, these paper claims could quickly become worthless. The fund's prospectus even notes that the gold bars allocated to the fund may be different from the reported fineness or weight required by the London Good Delivery Standards. There's no guarantee the fund is holding high-quality gold bars, and there are significant concerns about counterparty risk if gold prices explode to the upside. Because of the way the ETF is structured, shares of GLD could fall even as gold prices soar. To me, you should invest in physical gold bullion, not paper gold. So I recommend buying and taking possession of 1-ounce gold coins and bars. But there's an even better way to profit from the rise of this new monetary system. It's a gold investment few people know exists. A small group of investors have figured out a unique way to profit from gold. They're striking special deals with certain companies involved in the gold industry that allows them to collect hundreds of thousands of dollars in income. Nolan Watson, for example, started using this strategy back in 2008. So far, he's already increased his investment by 809%. That's enough to turn a small investment of $25,000 into almost $250,000. Gold expert John Duty has increased his portfolio by more than 1,200% with this strategy, and many consider him one of the best gold investors of our time. Here's what he said recently. "I love this investment. You just make these deals and move on to the next one." I call this strategy golden income streams, and it has performed much better than the metal in recent years. Take a look. While gold is up 61% since 2008, this investment is up 352%. The good news is you can also participate in these deals right from any brokerage account. And what's really amazing is that this special class of gold investment has nothing to do with ETFs, bars, coins, options, mutual funds, or investing directly in gold miners. And yet it has managed to beat all those types of gold investments. While golden income streams have performed extremely well in recent years, I expect them to go parabolic once investors lose faith in the dollar. Even if gold moves to just $3,000 an ounce, I expect this investment will move more than 700%. That's enough to turn each $20,000 into a little more than $165,000. If you're interested in getting the full details of this investment, I'd like to give you free access to my research report on this subject called Golden Income Streams, Precious Metals Industry's Best Kept Secret. This research report details everything you need to know about this unconventional way to profit from a higher gold price. It also includes my top 3 golden income streams. I've posted all the information online, and in a minute I'll show you how to access it free of charge. But first, I want to move on to another investment you should consider. As much as I like gold, silver will do even better in this transition to a new monetary system. Relative to gold today, silver is extremely cheap. For most of history, gold has traded at a 16-to-1 ratio to silver. In other words, the price of gold historically has been 16 times greater than the price of silver. Incredibly, that ratio is now 58-to-1. I believe we'll see that historic ratio of 16-to-1 again because that's what happens during monetary crises. That's what happened in the 1970s when people lost trust in the US dollar. The gold to silver ratio moved from 42-to-1 all the way to 15-to-1. That's what made silver rally 1,762% during that decade. With the ratio now at 58-to-1, we could see similar gains. If gold moves to 3,000 and the gold to silver ratio returns to 16, silver will be trading at $187 an ounce. That's a return of almost 700% from today's price. I'm not the only one who believes this will happen. Resource guru Eric Sprott recently said, "I think silver will be the investment of the decade and will trade down to 16-to-1 ratio to gold. Your return will be 300% or more. Silver will by far be the better investment going forward." That's why I'm also recommending buying 10-ounce silver bars and coins. But there's an even better way to profit from the rise of silver. In fact, I've isolated the 3 best silver investments for the coming crisis. These plays could double or even triple your returns from silver. In this chart, you can see how one of my top silver plays has performed much better than silver in recent years. While silver has gone up 144%, this investment has gone up 523%. That's enough to turn $15,000 into almost $100,000. Of course, that's nothing compared to the gains this investment will see when the whole world finds out the Fed holds no gold. You'll discover all the details about this investment in my special report, The 3 Top Silver Investments for the Coming Crisis. This report features the 3 best ways to take advantage of the world's most promising precious metal. Others have paid $75 to access this research, but in a minute I'll show you how you can access this valuable information free of charge. But first, I want to move on to the second step you need to take. It involves one of the biggest dangers investors are facing today. Step number 2, get out of bond funds with maturities greater than 5 years. As I said, once the market discovers the Fed has been lying all these years, confidence in the U.S. government will evaporate. Investors will start dumping Treasury bonds, driving their price lower. Many investors who have reached or are quickly approaching retirement are desperately looking for investment income, and most of them have parked their cash in what they assume are safe bond funds. But that's a dangerous belief. Bonds are just another form of paper money. When confidence disappears, retail investors still holding bond funds will be trapped. It's already happening. Just in the past 6 months, long-term Treasury bond funds have dropped 16%. Even legendary bond trader Bill Gross, arguably the best bond investor ever, recently said, "The bond bull market is over." If you're heavily invested in bond funds, you need to take action now. I recommend getting out of bond funds with maturities greater than 5 years. Those are the funds that will suffer the biggest losses. But you don't even need to take that kind of risk to generate income. There's a much safer way to get the retirement income you need. It's an investment that lets you collect hundreds and even thousands of dollars at a time almost instantly, and it can generate 5 to 10 times more money than dividend stocks or bonds. The majority of investors don't know about this unique investment, but it's starting to get more attention in the mainstream press. As the Wall Street Journal recently reported, at a time when investors are caught between meager interest rates on savings accounts and worries about whether the recent stock market run-up can continue, funds using this investment to generate extra income are gaining attention. Surprisingly, this secret has nothing to do with buying bonds, mutual funds, ETFs, options, or dividend stocks. And yet, it allows you to collect anywhere from $515 to $3,525 or more every single month. And the best thing is, this investment works in any kind of market environment. You'll collect instant income even during the coming monetary crisis. In fact, the cash this investment pays increases when there's market turmoil. In some occasions, the payouts go up 100% in times of crisis. It's the perfect strategy for those who are looking for safe ways to generate income every single month. It's a shame that every American doesn't know about it. I also wrote a special report to show you exactly how to use this strategy yourself. It's called How to Turn Your Brokerage Account into an ATM. It gives all the details on how you can begin collecting hundreds and even thousands of dollars right from your brokerage account every single month. Once you learn this secret, you'll never again have to worry about running out of money. If you're interested, I'll give you full access to this report in the next few minutes. But first, let's move on to the third step you need to take to protect your wealth. Step number 3, move some of your wealth outside the U.S. financial system. All the investment secrets I've mentioned so far will allow you to grow your wealth during the coming crisis. But if you don't have a safe place to stash your cash before the government comes knocking on your door looking for handouts, you're screwed. Once trust in the U.S. is destroyed, our government will lose the ability to borrow money at extremely low rates. Our government will become desperate, and we all know desperate governments do desperate things. Lawmakers will do anything to get their hands on your wealth, just like they've done it in the past. When President Roosevelt came into office in 1933, he inherited an economic depression. Desperation settled over the government. Under the threat of 10 years imprisonment and fines of $10,000, it ordered Americans to turn in almost all of their physical gold. Aside from confiscating your personal wealth, the government may also try to stop you from moving your money out of the country or investing it abroad. That's what President Johnson did in 1968 when he implemented mandatory controls on foreign investments. I know many Americans think this could never happen again. But did you know this kind of government abuse is already being discussed? The Obama administration has quietly been hatching a plan to nationalize private 401k and IRA accounts to replace them with government-sponsored retirement annuities. The prospect of government invading our retirement savings is so troublesome that National Seniors Council Director Robert Crane warned that this whole issue is moving forward very quickly. Already there is a bill requiring all businesses to automatically enroll their employees in IRA plans in which part of every employee's paycheck would be automatically deducted and deposited into this account. If this passes, the government will be just one step away from being able to confiscate all these retirement accounts. Keep in mind the Treasury Department has already tapped federal retirement programs to prevent the government from hitting the debt ceiling in 2011 and 2013. On both occasions, the Treasury took extraordinary measures to stay under the debt limit. Here's how the Washington Post reported these actions. The Obama administration will begin to tap federal retiree programs to help fund operations after the government lost its ability Monday to borrow more money from the public, adding urgency to efforts in Washington to fashion a compromise over the debt. This is a step towards full confiscation of private pension funds at some point. Make no mistake, when the government runs out of money, it will come for the $19.4 trillion Americans hold in retirement accounts. That's why Jim Rogers recently told me I would be very worried about having an IRA or retirement account in the U.S. The writing is on the wall. The small creeping steps are already happening. You must learn how to legally protect some of your wealth. You'll find all the information you need in another report I prepared called How to Keep Your Wealth Out of Uncle Sam's Hands. In this report, I'll show you how to legally move your money out of harm's way. You'll learn about the only way to legally avoid all or nearly all U.S. taxes on personal and business income, including most capital gains and estate taxes, without having to renounce your citizenship. You could pay nearly zero taxes, as in never having to pay taxes to the IRS again. I'll tell you about a special retirement account that will not only protect your nest egg against a government attack, but that could also give a big boost to your portfolio. You'll also learn a little-known income-generating investment called DVA, which increases its payouts every time the dollar falls. This is a great way to ensure your retirement income doesn't lose purchasing power, plus it's not subject to confiscation. And I will tell you about the single best place to store your physical gold to make sure it's out of reach from government confiscation. Remember, in a monetary breakdown, the government will do anything to get its hands on your wealth. Don't let that happen. I strongly recommend you take action now, before the government confiscates part or all of your retirement savings, because after the rules take effect, it will be too late. Again, I've made my research available online, and I'll show you how to get easy access in just a minute. But before I do that, there's another investment I want to recommend. Step 4. Buy real estate in one of these 3 countries. One of the best ways to hedge against Washington's coming cash grab is foreign real estate. After all, land is hard to repatriate, and since it's a hard asset priced in a foreign currency, it's likely to maintain its value when the dollar collapses. Plus, it can offer rental income. Many of the real estate projects I've evaluated, and like the most, tend to be in all-cash markets where mortgages are rare. That's important because cash buyers dramatically reduce price speculation fueled by easy bank credit. In turn, that reduces the risk of overpaying for a particular plot of land or a beachfront condo. I'll tell you about the 3 American-friendly safe havens I've uncovered in another report I've just completed. It's called the Top 3 Foreign Real Estate Opportunities. In this report, I'll tell you about a South American paradise that welcomes foreigners. This place offers a zero tax rate on foreign income. You'll also have the freedom to open bank accounts that pay sharply higher interest rates than you can find anywhere in the U.S., and citizenship is attainable in just 3 years. I'll also tell you about the Trugoltz Gulch. This new 1,500-acre self-sustained community of gorgeous stone, stucco, and tile-roofed homes is surrounded by a working vineyard and a beautiful 18-hole golf course set against a mountain backdrop. This is a place for affordable, off-the-grid living at a level you've grown accustomed to in the States. And you'll learn about the chance to have the Pacific Ocean right outside your front door. At this 2,700-acre community, you can find leafy lots with sweeping ocean views for $150,000 or less. It's very close to the U.S., and the cost of living is one of the world's cheapest, and the caliber of amenities is first rate. Plus, I'll share my personal list of contacts in each of these countries who can provide you with everything you need to know about the local real estate market. You'll learn more about these American-friendly destinations if you choose to claim your free copy of the Top 3 Foreign Real Estate Opportunities. So, how can you begin taking these simple steps right away? Well, my company has been publishing financial research for the past 15 years. We publish our best ideas in a one-of-a-kind monthly newsletter called The Sovereign Investor. During that time, we've helped a lot of individuals like you protect and grow their wealth. The Sovereign Investor readers put it best. Darren Anderson tells us, "Thanks to you, I took the necessary steps to prepare myself for the upcoming crisis. My portfolio has increased 80%. Kelly W. says, "I have been a subscriber to this newsletter for a long time and it is wonderful. Great investment advice. The economic perspective is way ahead of the curve and tells things the TV talking heads never tell you." Ira Weston from Naples, Florida writes, "I'm making better than 20% on what I'm investing in, and it gives me peace of mind to know I have assets that people don't know about." Ross Fink of San Diego, California says, "The Sovereign Investor provides must-have information." Karen W. raves, "The Sovereign Investor, like no other publication, has opened my eyes to what is really happening in this country. I only wish I had known sooner. Fantastic." And just the other day I got this note from Jonathan R. saying, "I get excited just thinking about each issue. I eat it up. I can't leave my desk. I return to it time and again for rereads. You guys are outstanding. I must tell you I have turned many heads with comments and knowledge I have gained from your letters and reports. Thank you. Just don't stop, please." It's rewarding to get letters like those. I'm happy to know that my research is helping thousands of subscribers survive and thrive through market crashes and government boondoggles. But I have to tell you right now, I fear a lot of folks will simply ignore my latest warning. There are just too many people who believe America is still the exceptional country she was in the 20th century. They believe America can do no wrong, and that somehow our nation is exempt from historical forces that have affected other countries. Please, don't get me wrong, I love my country. It has given us the greatest standard of living the world has ever seen. No other nation has built so much wealth and attracted so many immigrants over the last 250 years. No other nation has demonstrated an equivalent track record for sustained innovation and productivity improvements. But at the same time, no government has ever borrowed anywhere near as much as America has. Let me ask, do you truly believe that no matter what we do, nothing can ever destroy our currency and our standard of living? Are we so exceptional that as a country we are immune to basic economic laws? Are we so exceptional that we won't suffer any consequences from our reckless borrowing spree? Or that we can get away with the biggest cover-up in financial history? Sorry, but I don't believe we're that exceptional. Every empire throughout history has collapsed, and they all shared the same nothing can defeat us mentality. The U.S. will be no exception. I know that admitting the truth can be hard sometimes, but we can no longer ignore the reality that we have become nothing more than a nation addicted to money printing and debt. The only thing that has prevented a major collapse of our way of life is trust. Trust in the U.S. government and its institutions. But as I showed you in this presentation, that's about to change in a significant way. Those who continue to blindly believe in American exceptionalism are in for a rude awakening, and much sooner than they might imagine. I sincerely hope you won't be among the many Americans who will get caught totally by surprise when trust evaporates and our monetary system collapses. That's why I've created this presentation, and it's why I'd like to give you access to all 5 reports I've mentioned here at absolutely no risk or obligation. Simply let me know you'd like to take a trial subscription to my monthly research, The Sovereign Investor, and I'll immediately give you access to Research Report Number 1, Golden Income Streams, Precious Metals Industry's Best Kept Secret. Research Report Number 2, the top 3 silver investments for the coming crisis. Research Report Number 3, how to turn your brokerage account into an ATM. Research Report Number 4, How to Keep Your Wealth Out of Uncle Sam's Hands, and research report number 5, the top 3 foreign real estate opportunities. Also each month, I'll send you my private research letter, The Sovereign Investor. I'll keep you up to date on how this crisis is unfolding and show you all the measures you must take to protect your wealth. I'll give you specific investment recommendations, wealth protection strategies, and offshore banking solutions. These are strategies you won't find on the pages of the Wall Street Journal or The Economist. This print and online research will be sent right to your physical and virtual mailbox once a month. So how much does my work cost, and how can you get started? Well, as I mentioned before, trust is key in every relationship. I know that in order for me to earn your trust in your business, I need to deliver on everything I've promised. So I want to make it as easy and hassle-free as possible for you to try my work today. That's why I've asked my publisher to give you a special discount of 50%. So instead of paying our regular rate, today you can pay less than your phone bill and receive everything I've mentioned here. That includes research report number 1, Golden Income Streams, Precious Metals Industry's Best Kept Secret. Report number 2, the top 3 silver investments for the coming crisis. Report number 3, how to turn your brokerage account into an ATM. Report number 4, how to keep your wealth out of Uncle Sam's hands. Report number 5, the top 3 investment real estate opportunities. 12 issues of The Sovereign Investor. Urgent investment alerts notifying you immediately of any buy-sell recommendation I make in our model portfolios. I'll also send you an important news bulletin and instant alerts on any political or black swan event that could impact our portfolio. This is the kind of detailed research that others would likely pay $1,000 to $5,000 for. But you'll receive all of this powerful benefits as a subscriber to The Sovereign Investor, and you get 24/7 access to our Sovereign archives. Once you sign up, you'll get password-protected access to all our past and current special reports, issues, and recommendations. What's more, I've asked that if at any time in the next 4 months you decide The Sovereign Investor is not for you, that you are allowed to cancel and receive a full refund. I want you to be safe and profitable through the era ahead without making any long-term commitment. By taking action today, you won't be among the millions of Americans caught by surprise when the trust dies. Remember, China could announce its gold holdings any time. When they do, everyone will connect the dots and figure out that the Fed has been lying all these years. I want you to be fully prepared when that happens. So I've asked my publisher to allow you to keep all the special reports you receive as my gift to you, just for giving The Sovereign Investor a try. Essentially, we've made it risk-free to try. You really have nothing to lose. You're agreeing only to try my work and see if you like it. Simply take the next 4 months to check out my research and access all 5 valuable reports I've mentioned here. And even if you decide after 4 months that my work is not for you, you can still get a prorated refund for any time remaining on your subscription. I hope you will take these simple steps to safeguard your family, your wealth, and your retirement assets. Please keep in mind that there's not much time left. This coming collapse will be devastating and swift. I urge you to take action today. Just because our monetary system hasn't collapsed yet, many people think it never will happen. People tend to make that mistake over and over again. They tend to extrapolate recent events into the future indefinitely. Think back to the late 1990s. Stocks were rising just about every year, so many investors assumed stocks could only go up. But they found out just how wrong they were when their wealth evaporated in the stock market crash of 2000. And because housing prices went up through the 1970s and 80s and 90s, everyone thought real estate prices couldn't fall. As a result, the housing crash caught most Americans by surprise. Today, there's something similar going on. Just because foreigners have been buying U.S. bonds for decades, everyone assumes that will continue. And the same applies to the dollar-centric monetary system. Just because the dollar has been the world reserve currency since 1945, everyone assumes that will continue forever. But make no mistake, the dollar is not the world's first reserve currency, and it certainly will not be the last. In the last 2,500 years, other currencies have achieved that status as their issuing nations gained and lost economic prominence. As you can see in this chart, the US dollar is approaching the average lifespan for this role. Remember, Fort Knox is just about empty. Our government has frittered away our wealth, and now the dollar is backed only by trillions of debt that we'll never be able to repay. And by April 2014, the whole world will realize our gold is gone, that it now sits in Chinese vaults, and that our currency is just a scrap of paper. In this crisis of confidence we face, the unraveling will happen fast. There will be no warning. Most people will be caught completely off guard and unprepared. That's why I sincerely hope you'll join us. Unfortunately, despite all the evidence I've shown here, I know a lot of people will do nothing. When China announces official gold holdings and the trust comes crashing down, they won't know what to do. When the price of a gallon of milk jumps to $8, When ground beef jumps to $10 a pound and when gas hits $9.50 a gallon, they'll get desperate. And when this economic tsunami slams America, millions of unprepared citizens will hit rock bottom. Don't let that happen to you and your family. You can take action now to protect your wealth, your spouse, your children and grandchildren, or you can become just another victim of this coming meltdown. Since you've watched my presentation this far, I'm confident that you'll do the smart and prudent thing. You'll take the necessary steps now to protect yourself and your family. To get started, simply click on the subscribe now below. When you do, you'll get all the details of this limited time offer and also find an additional bonus for enrolling today valued at $250. And remember, I'm not asking you to make any big commitment. All I want you to do is take the next 4 months to get all of our best ideas. Take an immediate look at all 5 research reports I've described. They reveal everything you need to know to both protect and grow your wealth during the cataclysmic era ahead. And this information is yours to keep, whether you choose to continue receiving my research or not. You're not risking a dime to check anything out. I hope you'll join us.